The 8th of August 2025. Okay, so what's in store? What's in store? What's in store for us today? Very interesting things I want to talk about. Okay, so right today, this current phase of the Bitcoin market cycle and analytical outlook. Now, a shift in market sentiment is emerging through leveraged ETFs tied to MicroStrategy. The ticker symbol MSTR, it's the largest corporate holder of Bitcoin. MicroStrategy recently rebranded as Strategy is the largest corporate holder of Bitcoin, sitting on roughly 628,791 Bitcoins, which is equivalent to roughly about 71 billion as of August 2025. Now, the Defiance 2x Short MSTR ETF, the ticker symbol SMST, which trades on Nasdaq, jumped 19%, its biggest gain since late February. This also marked the first time it has gone up for 3 weeks in a row since its launch in August last year. Now, this move broke a long-term downtrend and formed a bullish Marubozu candlestick, signaling strong momentum for bearish bets against MSTR. Now, for those who are new, Marubozu candle is a big candle that is huge, big candle, trading candle, something like this. Let me draw it for you, something like this. Big, huge candle, and it's bought. Okay, there's no wick, so that shows a very, very strong buying. Okay. Now, this suggests traders are positioning for a decline in MSTR and by extension Bitcoin, since shorting MSTR is often used as a proxy for shorting Bitcoin. Now, supporting this bearish outlook, investors' flows show 16.3 million in net inflows into the 2x short ETF over the past 6 months, while the 2x long ETF saw over 275 million in outflows. Now, this rotation of capital indicates rising skepticism in the market. Overall, MicroStrategy's close link to Bitcoin means its weakening performance may be flashing a broader warning of a potential correction in Bitcoin price. Okay, that's one. Now, next, altcoin season. What about this? Now, another classic sign of a late-stage crypto bull market has emerged, or what we call maturing, is slowly moving, okay, from the Bitcoin movement moving into the altcoin. And we call it the altcoin season. Now, this phase typically follows a strong Bitcoin rally that stalls or moves sideways, prompting investors to chase high returns in Ethereum and smaller cap cryptocurrencies. Now, the result is a period where many altcoins dramatically outperform Bitcoin. Historically, altcoin season has coincided with or signal Bitcoin market tops. In 2017, after Bitcoin peaked at 20,000, capitals flowed into altcoins, and Bitcoin dominance fell from about 86% to 39% even as its price plunged. Now, a similar pattern occurred in 2021 when a frenzy in meme coins and NFTs accompanied Bitcoin's rise and foreshadowed a correction. Now, recent data suggests a similar trend is underway. Bitcoin dominance has dropped from over 64% to around 59%, with Ethereum leading the charge by rising 54% in the past month versus Bitcoin's 10%. Now, Ethereum now holds around 12% of total crypto market cap, its highest in years. Over 40% of the top 50 altcoins have recently outperformed Bitcoin, approaching the 75% benchmark that defines an official altcoin season. Now, this shift also supported by derivatives data. Ethereum perpetual futures volume have overtaken Bitcoin's for the first time since 2022, signaling growing speculative interest Other major tokens like Solana and Ripple have posted double-digit weekly gains, far outpacing Bitcoin. Okay, now several factors drive this rotation. Investors often view Bitcoin as offering less short-term upside after a major rally, so they turn to altcoins for higher returns. On-chain data shows increasing stablecoin flows into alt exchanges, adding fuel to the altcoin rally. Bitcoin dominance has seen its steepest drop of the cycle, falling from 66% in late June towards 60%, with analysts like Peter Brandt calling it an official alt season. Now, alt season often reflects market euphoria and late cycle speculations. As Bitcoin stabilizes, attention shifts to more volatile assets, often preceding a broader pullback. Past cycles saw altcoins crash 70 to 90% after their peak. While today's market is more mature, the pattern remains. A booming altcoin market may signal Bitcoin is nearing a cyclical top or entering a more fragile phase. Investors should be cautious, as excessive enthusiasm in altcoins often precedes market-wide corrections. Okay? Now, the key question is this right now. Can Bitcoin still trade higher, since we are looking that we have shifted into a possible altcoin season? Now, the chart comparing stablecoin supply to Bitcoin price reveals a growing pool of liquidity that could support further Bitcoin gains. As of August 5th, 2025, the total market cap of major USD-pegged stablecoins reached 235.3 billion, while Bitcoin trades around 115,000. And here you go. Now, notably, stablecoin supply has continued rising even as Bitcoin has moved sideways, okay? Creating a build-up of potential buying power, as you can see from the chart. Now, stablecoins act as a deployable capital, and historically, increases in their supply have often preceded major Bitcoin rallies. This pattern was seen in 2020 to 2021 bull run, and again in 2023 and early 2025, when stablecoin market caps rose during Bitcoin's consolidation, signaling latent demand. Now, the recent bullish crossover in stablecoin supply ratio, SSR, momentum indicator reinforced this, suggesting that capital might soon flow into Bitcoin. Right? Binance stablecoin reserve also hit a record 31 billion, reflecting a large pool of sideline funds that could enter the market once sentiment improves. Now, this optimistic view, right, is that even a small portion of this capital could trigger a strong Bitcoin breakout. Historically, such increases in stablecoin supply have helped fuel price rallies after Bitcoin dips or periods of consolidation. However, the growing stablecoin pile could also reflect hesitation among investors, signaling caution at current Bitcoin prices. So if stablecoins reserve rise faster than Bitcoin inflows, it may suggest limited immediate upside unless that capital is deployed or new money enters the market. Still, the medium-term outlook remains bullish. Now, with record levels of stablecoin liquidity waiting on the sidelines, Bitcoin appears to have room for further gains, especially if confidence return on new catalysts emerge, right? A breakout above recent high remains possible, supported by this buildup of crypto native capital. Okay. Now, we are also looking at the seasonal weakness, which I've highlighted in the previous report, and also the potential Fed easing coming in September. So what does this mean? Now, late summer, it's regarded as a seasonally weak period for risk assets, and it's coinciding with shifting expectations around US Federal Reserve policy. Now, this is particularly relevant for crypto, as Bitcoin has been closely tracking equities, showing a strong correlation with the S&P 500. Its correlation with the S&P 500 so far was about 0.9 in Q2 2025. Now, historically, August and September have been among the weakest months for both stocks and Bitcoin, with Bitcoin averaging under 1% return in August over the past 5 years. Similar seasonal trends have also led to sluggish crypto performance in early fall, followed by recoveries later in the year. Now, as of early August 2025, right, Bitcoin is trading in a range between 111,920 and 115,720 after a strong rally in June and July. However, momentum has slowed. On-chain data points to reduced trading volumes and some profit taking among both small and large holders. US equity markets have also lost steam, pulling back from highs in late July, which have removed a key tailwind for crypto. Now, liquidity remains high in the US money market funds, now totaling 7.4 trillion as investors continue to favor interest-bearing instruments over risk assets. The focus has now shifted to the Fed's rate policy. The central bank has maintained its policy rate at 4.5% for most of 2025, but with inflation cooling and growth slowing, market participants increasingly expect a pivot. Now, futures markets now imply a 90% chance of a rate cut in September, and some analysts anticipate 2 or even 3 cuts before the end of the year. Rate cuts generally benefit risk assets by lowering yields, weakening the dollar, and improving the relative appeal of stocks and crypto. Still, the motivation behind those cuts matters, yeah? Okay, so this is the crucial point, the motivation behind the cuts. If the Fed begins easing due to concerns about weakening economy, that could damper investors' confidence. Okay? While some past rate cutting cycles have extended bull markets, others, such as in late 2007, have signaled deeper troubles. So it depends how the market views this. What's the main reason behind this cut? Today's economic signals are mixed, with inflation nearing its target, but softening GDP and labor market indicators raise the risk of a mild recession later in 2025 or 2026, right? So in this context, Bitcoin may face short-term headwinds of further consolidation through August and September. A pullback to the 103,400 or even 96,700 range is possible if equities continue to decline. Volatility in Bitcoin has fallen to multi-year lows, a setup that often precedes sharp directional moves. A temporary dip could flush out excess leverage and reset market momentum nevertheless. Now, the beginning of a rate cutting cycle might be seen as a positive signal, potentially triggering a Q4 rally. However, the strength and sustainability of any rebound will depend on broader macroeconomic conditions and whether liquidity truly returns to risk assets. Okay, something that which I'll be covering soon. Now, if the cryptocurrency is to rebound, there must be some bullish catalysts, right? So what are the catalysts so far that's on the horizon? Even some indicators flash, caution. The crypto market's longer-term prospects are bolstered by major catalysts expected in late 2025 or early 2026. In particular, regulatory clarity in the US is improving markedly, and few key developments could substantially shift sentiments in a positive direction. Now, as explained before, the Clarity Act was passed by the US House of Representatives in July with strong bipartisan support. It delineates the boundaries between digital assets that are digital commodities overseen by the CFTC and those that are securities overseen by the SEC, effectively drawing a bright line to resolve the long-standing confusion in US crypto regulation. Now, other than the Genius Act, I deem the Clarity Act as one of the most important bill that need to be passed. That once it's passed, yes, the crypto future would be bright. Now, the second one is the Anti-CBDC Stablecoin Privacy Act. It's a piece of legislation which its name suggests to prevent the issuance of US central bank digital currency unless explicitly authorized by Congress. So all told, these catalysts paint a picture of market that, while cautious in the immediate term, still has significant bullish ammunition in store. Okay, so conclusion is simple. Bitcoin's current cycle phase is one of heightened but justified optimism tempered by short-term caution. The roadmap is becoming clearer. Survive the late summer turbulence that we're going through right now. Position for a possible Q4 rally and be prepared to secure profits during the climax. Okay, so that's how I'm seeing the cryptocurrency at the current moment. Hopefully, it will shed some light into you as well. And that's the end of the report today.